Hello, this is Brian Shannon from AlphaTrends.net. Today is Wednesday, the 13th of February, 2008, and the market's closed. The market's definitely making some headway here the last few sessions. Today, it was up $1.66 or 1.23%, and we saw some strong buying once again. So yesterday, we saw the market pull back to this 134 level where we had previously experienced some selling, and we were looking for the market to get above. That level was tested, as was the 5-day moving average, which is now rising, and that led me to believe yesterday that perhaps we would see a recovery if this 134 level could hold. I actually think I mentioned 134 or 133.75 or so. The gap obviously caught a lot of people off guard once again, so this market is tending to gap higher. Yesterday it failed. Today it held on to those gains, and the main theme here really is that we've got a lot of volatility in this market. Like I said yesterday, you're best off in this volatile environment sticking to the shorter term trades. Looking at that short sale yesterday, had I held on to that, it would have been, I would have woken up with some pretty bad losses here this morning had I held on to it. But one encouraging thing might be that, the old phrase that volatility peaks near turning points. And that's just one little phrase. That's not a reason to buy. But we do have this pattern of higher highs and higher lows, and a rising 5-day moving average, I think, is most importantly what we're seeing here on the S&P 500. And what I had suggested a couple days ago did, in fact, turn out to be the case that we've seen happen, which was a move above the declining 5-day moving average, similar to what we saw back in late January, followed by a pullback to the 5-day moving average, and then a continued rally. So that seems to be a pretty good setup. Maybe we're in for a little bit more buying in here. However, again, we're still below that 137 level that we've been keeping an eye on, and just draw that in there right now. 137 has been a level of resistance, and above that, of course, we've got this 140 to 141 level. We've got that 50-day moving average declining. It's easy to look at this market on a day like today and say, that we had some good bullish action, but it's tough to believe in it really when you have all that. When you have all these larger, more bearish indicators, such as the 50-day moving average, the 200-day moving average, all declining, it's tough to believe it. And a lot of times they make these rallies look real good in a primary downtrend, but until we can really clear 140, 141 and close above there for a couple days, I still think that you're best off using this environment to do shorter term trades in. And you want to look at the direction of the day, basically. Looking at the S&P 500 for today, we saw that initially it gapped up, rallied a little bit, then got below that VWAP. The VWAP was declining all day. I had done a short sale in Celgene that actually kind of worked out in there for a little bit that I had recorded, and that's available on my blog. There's a link to the video that is over at iTunes. It won't be uploaded anywhere else, so you'll have to go to iTunes and download it over there. But the VWAP started flattening out here, and you could look at this as an inverted head and shoulders pattern. It kind of broke this resistance, and that's where the buyers kind of took control and maintained that control once again. So we do see a little bit more encouraging signs here on the intermediate term. However, the mixed signals from the larger time frames still suggest that we be very cautious in here. If you're trading the long side and enjoying some of these gains, solar has been super hot. Basically, First Solar today reported earnings. They were up $40, $50 or something like that. And a lot of the little solar plays are starting to move, but their charts still look terrible. They're still broken down stocks with a lot of risk. So don't fall for these larger for these stocks for other than trades when the larger trend is lower. The semiconductors were up, 3% today with their looks like a $10.67 gain in the SOX. And this might get some attention here if this market can get back above this trend line that's been kind of keeping it captive since about mid-October or so. What I'm going to start doing is go back to analyzing the SMH as well. The semiconductor holders are something that you can actually trade in, and they have the inverse funds for these as well. So this makes for a better vehicle to analyze each day, and that's what I will do. So let's start looking at these numbers in here. And the key number in the semis is looking like about $30 a share. It's where these where this previous high was from a couple weeks ago, as well as the location of that declining 50-day moving average. Be careful on any strength up to there. A lot of times prices will, maybe go above that 50-day moving average for a day or two and get some novice technicians interested in the action, but they typically fail. More important than where the market is in relation to the 50-day moving average is what's the direction of the 50-day moving average, and it's clearly indicating that the trend is still lower. So we'll be looking at the SMH from here on out again. The IWM, Russell 2000, of course, we're just going to draw this in to remind us of the bigger picture, which is the $73 level, where we've seen the prior support turn into resistance, as well as the location of the declining 50-day moving average. So that keeps us kind of distrusting of the overall strength that we're seeing. However, on short-term basis, this market was up 2% today, and it did bullishly hold above that 5-day moving average as well. So this market also tested the 5-day moving average, similar to what it did late January, after recapturing that 5-day moving average like it did here, and then finding support and rallying higher from it. So right now it looks like key level of support is probably going to be right around in here, about 70.65. That's a level we were watching earlier in the week as well. The market held above that for today, so I think that's going to be important, as well as yesterday's lows down near about $69.70 or so. And bullishly, we closed above that $71 level that I was saying that the market needed to get above 71 to think that we had any potential chance for a another test of that 73 level, and it's looking like we may run up towards that 73 level. If it gets above there for a day, maybe 2 days, still be very distrustful for the same reasons I just mentioned on the semiconductors, which is the direction of the 50-day moving average is still declining. Volume has been trailing off on this rally, and a lot of times the market looks good right before a decline. You've got to be aware that the longer-term trend is still looking negative. We can point to maybe a bottoming pattern in here that could lead to a reversal, though. And again, the reason I point this out is because we have to be aware of all potential scenarios. The most important level of support for this market is now going to be right around here. Of course, the shorter term time frames that you trade on, you're going to be looking at levels like 70.65 or so, but the 68.50 is going to be a bigger picture level of support, because it looks like we're potentially tracing out this inverted head and shoulders pattern, which may lead to a reversal. I don't think it will, but again, you have to be aware of all potential scenarios. And the Nasdaq 100 today finished with a gain of 2%. Again, it's looking a little extended in here with these last 4 or 5 days of gains, but the key level of resistance, where the market ought to find resistance, is 46. Getting back above there, maybe this rally can turn into something a little bit more than just a rally within a downtrend that quickly fails. But bullishly on the 30-minute time frame, this level of prior support, which had been acting as resistance, was tested yesterday right at the conjunction of that 5-day moving average, which also is now rising. So this market is showing signs of intermediate-term recovery, and the long-term trend is nothing more than the sum of a bunch of short-term trends. So the short-term trend is where we take our price action, but we take our let me rephrase that. We take our cues to take action, basically, on the shorter-term trends, but always have to be suspicious of the overall rally when we take those trades that are in conflict with the trends on the larger-term time frames, such as, again, the declining 50 and 200-day moving average. The 200-day moving average just doesn't decline very often, and when it does decline, it can recover, but it takes time usually. So you still have to cast an eye of suspicion on this market and trade it more from a day-to-day type of time frame and a stock by stock, because there's a lot of stocks going up and there's still stocks that are declining as well. So if you can find the right trends to latch onto, just continue to exercise caution and strong money management skills, and you can make it through this difficult market period pretty unscathed, and a lot of times with profits as well.